Michael Zakkour. Did I say that correctly, Michael? Thank you. Five new digital founder and author of The New Retail. All right. Can we talk about this calendar thing? Did it matter at all this year, in your opinion?
Yeah, it did matter. It jumped out at me immediately in the summer, when I'm planning my holiday rituals and what I'm doing for my own shopping and working with my clients. I said, oh, my God, we're only going to have, I think it was 27 days between Thanksgiving and Christmas. So it was short. But consumers proved to be incredibly resilient, even in a shortened season. People want to ask you, hey, how'd it go? Who's the winners? Who's the losers? The value retailers have done very well, Walmart, dollar stores. And I think that's because people had less money to spend, and they wanted to spend it in fewer places, and they had a shorter amount of time to do it.
What were the things that jumped to the front of the pack here in terms of what people were buying and how they were dealing with this idea of limited budgets?
Yeah, electronics were the clear winner. So we think gaming consoles, new phones, new laptops, and that created a mini boom for the retailers and the brands and the technology companies who are inserting their stuff into those devices. So if you see ChatGPT, downloads are through the roof because I got a new phone. So I think electronics, also apparel, casual apparel, a lot of pajamas, a lot of cargo pants, and a lot of graphic tees.
Cargo pants.
Yeah. It's almost like we're now this is pandemic 2.0, where everybody's like living in the comfort gear.
I'm not supposed to say this, but there was a lot of talk about Victoria's Secrets doing really well. Didn't they have a report out last week?
Why can't you say that?
Well, it's sort of your department, not mine.
Yeah, I didn't see how they...
You didn't see that? Okay.
No, but, if we look at the retail stocks who are doing well right now, it's reflective of the season. So dollar stores are up, Walmart's up, the TGX stores are up. It's all that discounting.
I had a couple guests on Worldwide Exchange this morning who were talking about this idea that the K-shaped economy continues in 2026, that the affluent customers are still confident in the economy and spending like the economy is booming, and budget-minded people are not. What are you seeing?
So our research internally showed that over the course of 2025, about 80% of consumer spending was spent by the top 20% of earners. So that is a reality. It's the way the season's gone. And again, I think that's why, the discount retailers did really well this year.
Is 2026 going to be then a year for luxury retailers?
It could be a year for a comeback for luxury retailers. Luxury had a little bit of a rough 2025, again, because of inflation globally. I think a lot of aspirational luxury buyers have dropped out of the market. It's harder to justify I saved up for a $3,500 purse that this season is $6,500 and you didn't improve the value. You didn't tell me I'm getting something more than I did last year. So on the luxury end, we're seeing the ultra high luxury companies, Hermes, the big stuff, they're doing really well, but the aspirational bottom is pretty much fallen
like
out.
what, Tiffany, LVMH, that kind of level?
They're at the highest level. Even within those companies, it's the highest price products, right? The ultra. So the $500,000 watch, the $250,000 pair of earrings, those are moving really well. That, lowish to mid-level luxury, it's really hurting right now. So it should be a comeback
I'm
year.
not sure that we get the best read on the K-shaped economy through Christmas. My theory is that people, they do as much as they possibly can to extend themselves and to buy things for their loved ones. It's after the Christmas season that we might see this come more into focus, to the idea that there are these two really different things going on right now in terms of stagnant incomes and some concerns about jobs, and then the affluent who are reaping the gains, I think, of a stock market that's doing very well. So give us your outlook for 2026 in this report.
Yeah, I mean, listen, there's going to be a little bit of a holiday hangover, Steve, like you put there. People are going to wake up in the morning and say, oh, my God, look at my credit card bill and my buy now, pay later bills. Overall, though, I think 2026, we're going to see a fairly strong retail economy. Consumers are continuing to spend. They're obviously shifting to essentials and shifting away from the things that they don't need. They're really focusing on home, right? What are we going to get for clothes, food? The reality is going to be that inflation is still going to be up when we wake up tomorrow morning, and budgets are still going to be constrained. And that's why I'm still putting my bets on the budget and dollar retailers.
When I look at the macro situation with the consumer, I see a sort of bifurcation here. On the one hand, unemployment is relatively low. The balance sheets are in good shape. On the other hand, and by the way, in addition to that, you have these refunds coming through next year that could be very helpful. And then sort of countering that are the lousy sentiment numbers. Which ones win out?
Yeah, I mean, for me, this season, to your point, Steve, it's kind of been a little Dickensian. But, in the way of it was the best of times, it was the worst of times, right? So we're all feeling really good about spending in the holiday. But then we're going to wake up in January and February.